Welcome to HPK Provident Advisors Friday Live. Of course, this is where one, two, or three of the partners of HPK Provident Advisors located in Bridgeville, Pennsylvania, and in, Sarasota, Punta Gorda. Is that right, Mike? Punta Gorda?
Ponte Vedra Beach.
Ponte Vedra. I have, if you drop me in the middle of North Dakota, I'd be able to find my way around better than I can in Florida. I don't know. I just have a mental block. In any case, each Friday, 12:30 p.m. Eastern Standard Time on Facebook, one, two, or three of the partners of HPK Provident Advisors, let's just say Pennsylvania and Florida, talk a little bit about the markets, a little bit about financial planning, just some informational things. Things for you to think about and contemplate for your own personal financial situation. And then what we do is each week, Monday through Thursday, we post some informational pieces on social media, LinkedIn and Facebook, and some articles and just things that are going on and updates. And there's a lot going on. For example, Mike, as we know today, is the big meeting between Trump and Putin up in Alaska. I think that's going to have, whatever the results of that, will have sweeping effects on markets and the economy. And so we'll be waiting anxiously as to the results of that. Each Monday, Mike, now, Mike, I'm going to have you, before we get into the details of what went on during the week, if you would talk a little bit about your role in the firm and then how you help our clients out. But each Monday, Mike puts out kind of what's going to happen in the market during the week. And then we summarize it in layman's terms and hopefully in a very entertaining and educational way. Tuesdays are generally a little bit more personal, a little bit about us, things we've got going on. Wednesday and Thursday is generally financial planning topics. So, Mike, before you get into the week, talk a little bit about how you help our clients at HPK Provident Advisors.
Yeah, I'm very fortunate. You guys let me do the fun stuff, the fun part of this business, and that is managing the investments. So I'm in control of managing all of the fee-based accounts. We do it on a discretionary basis, meaning we don't have to contact the client to make changes. We do it on their behalf, as long as it's the overall accounts within their risk and return parameters. So the way I manage the portfolios is I do a lot of individual stocks and then ETFs and some mutual funds mainly for fixed income space, sometimes international, but we like to utilize ETFs in those places because the cost is a lot cheaper and performance is, pretty much in line for the most part. I would say 70% of the portfolio is allocated on a strategic basis, meaning these assets or these positions are in place to ensure the client is meeting their longer term goals, whereas 30% might be on a more tactical basis. So maybe I pick up some extra stocks in a particular sector because I want to be overweight in that. Like currently I see some potential risk in the market, so we have elevated cash positions. So we're able to maneuver in those lines. But so I'm the portfolio manager for HPK. Every week I do the look ahead post. So that's just kind of a recap of what went on during the previous week. And then I talk about what I'm looking at, specifically economic data or earnings in the week ahead. So this week, the highlight was really the inflation data. We had CPI data come out on Tuesday. Both figures, headline and core, were in line with consensus on a monthly basis. Headline came in at 0.2%, while core came in at 0.3%. Now, the year-over-year figures were a little different. Headline came in a tenth lower than expectations, coming in at 2.7%, while core came in a tenth higher than expectations at 3.1%. Those sound like pretty high, scary figures. But I was actually doing some calculations on my own this morning. So stay with me here. On a 6-month annualized basis, excuse me, I'm just getting all choked up over this data. Okay, so on a 6-month annualized basis, headline's actually tracking at 1.8%, below the Fed's target, while core is tracking at 2.2%. which is pretty darn close to the Fed's target. So can we say the plane has landed? Maybe not yet. And then we got the PPI data later on in the week, and that was a pretty scary figure. We got a 0.9 increase on the monthly basis, and in the, I think, mid threes or so for core PPI. So not the direction we want to see. That is the wholesale inflation data. So that could potentially bleed into the CPI data going forward. And then today we got retail sales. So a good mix of the health of the consumer and the inflation data. On a monthly basis, the retail sales were pretty solid, came in at 0.5%. But looking at the underlying data, some of the biggest increases were in car dealerships, furniture, all things that could potentially be impacted by the latest tariffs. So maybe we're starting to see some of that effect. And although it's good that we're seeing more consumer spending, maybe that just has to do with prices being higher. So something to keep an eye on. But let's turn to the markets now. We are technically in all-time high territory, although I wouldn't call this a decisive breakout. You like to see a little more volume and price momentum above that level. We just kind of got slightly above it and then stalled out for the past couple of days. So this is the broad S&P market weighted indice. As you can see, we're in all-time highs, but not decisively. It is good that we closed that gap from 2 Fridays ago. That's a positive sign technically. But looking at, let me see if I can find, this is the equal weight. As you can see, we have not exceeded those previous highs. So that shows me that breadth is not really that broad. The equal weight is more of a reflection of the overall stock market. As I talk about, the market cap weighted index is a lot more driven by the big tech companies. So something to keep an eye on. Bond yields continue to cooperate. But I'm still in the camp of, I think we're in store for a pullback. If not August, September. September is the weakest month of the year. Valuations are very stretched. Now, earnings have been pretty supportive. We're pretty much done with earnings season. I think 90% of companies have reported so far. The beat rate's been 81% above the 5-year historical average. And I think we're tracking about 11.8% versus consensus was, 4.5%, 5%. So that's a very large margin. Do you want me to go? I guess I'll go into the other blog posts.
Yeah, if we could roll right into that. Which, by the way, so you can see a lot of this content. I'm going to go ahead and, Mike, I'm going to go ahead and show where everybody can find our blog posts.
Okay, perfect.
All right. So this is our website. So this is HPK Provident Advisors. And not only it's hpkprovident.com, but not only can you go on to social media, but you can find a summary of these. So this is the main page. You head over here to sources and go to the blog. That's where you can get a lot of the details of some of the things that we're talking about here. So, Mike, if you want to roll into next topic.
Yeah, actually, the one that got posted on Tuesday was just a social post, so that didn't go onto our website. But that one was in reference to appealing your property taxes, whether it's worth it, who should do it. So that's an interesting read. Wednesday, I wrote one about, so we're getting pretty close to starting rate cuts again.
Yeah, and appealing property, the appraisal on property, that's something that I went through painfully several years ago. I could tell you that I paid somebody to do it, and it was a disaster, and I did it on my own, which took an incredible amount of time and effort, and it was a much better result. So if anybody has questions on that process, they can give us a call.
And I'm certainly it's not my field, property taxes, but I want to share something I recently found out in the process of buying a new home. I haven't personally done it yet, but I plan to. There's this thing in Florida, at least, called the portability clause. So if you move to a new house, it actually there's a calculation that takes into account your old property taxes. So it's something about if the market value being above the appraised value, you get that deduction from your property taxes on your new property. So it could certainly save you some money. So something to look into, at least if you're in the state of Florida.
Well, I would say, I went through that experience myself, and you're going through that experience. We are certainly not real estate investors, not in the sense of buying, physical land for our clients. We certainly work with a lot of folks, and we have a lot of personal experiences in property transactions. But fair disclosure, we are not into the financial planning of helping folks buy and sell individual properties. That is for sure. But it's things that we've come across. It's like a lot of things that we have the opportunity to interact with a lot of different folks, and either we learn things from assisting them directly in some of their financial planning, or just learn things just from knowing them and understanding their overall financial picture. But that is not my wheelhouse. But that's a very interesting one on the property taxes. Mike, on Wednesday, you had this that I thought this was particularly interesting.
Thank you.
A lot of the things that you cover, but with the interest rates at multi-decade highs, talk a little bit about the interest rate dynamics and in the properties. Housing market.
So, yeah, I thought it was appropriate since it's likely that the Fed's going to start back on their rate cutting cycle. It's almost 90+% priced in that we're going to have a September cut of 25 basis points. Now, 50 basis points is starting to be talked about, but I don't see that as a likely scenario, but we'll see. But anyways, I wanted to talk about what happens when the Fed starts to cut rates to the housing market, because I think it's a consensus view that that's going to be a good thing for the housing market. But I'm kind of taking the other side of that, and I'll tell you why. So first off, the Fed controls the short end of the curve, not the long end, which mortgage rates are tied to. Now, historically, when the Fed cuts rates, it's the long end comes down with it. But usually that scenario is an environment where we're seeing weak economic growth. Sometimes that rolls into a recession. So that's really when you get the long end to come down, with economic weakness and inflation coming down. So that's one point. I'm not sure with the current government debt levels that the long end is going to come down that much when the Fed starts cutting rates, unless we do see some serious economic weakness. And then my other point against this argument is I feel like that a lot of people have been putting off selling their homes over the past couple of years because they don't want to give up the low mortgage rates that they locked in during the COVID era. So my theory is if rates do come down on the long end, and meaning mortgage rates, that we could potentially see an influx of inventory hitting the market from existing homes. And then to go along with that, I believe home builders are sitting on about 9 months of inventory right now. So that's really rarefied air. So that, along with existing homes hitting the market, we could have a lot of inventory, and that could actually drive down home prices.
Interesting. You're right. The prevailing thought is lower rates, everybody goes and buys a house.
Yeah, and maybe they will.
Well, it is quite possible, but it's a little bit of a contrarian view, but strong arguments there, obviously.
And I guess it's possible that if rates do come down, it does increase purchase activity, but that could also mean that prices are coming down. So for the overall health of the housing market, I don't know if that's a good or a bad thing.
Well, for our clients, going back into what you were talking about, your role in the firm and whatnot, for our clients, can we say you'll be monitoring that?
I will be.
Okay. So that remains to be seen. On Thursdays, we've started a series each Thursday. We're covering pieces of what I have termed OB3, the one big beautiful bill signed July 4th of 2025. A lot of different changes in there that's going to affect everybody in some way or another. So the OB3 topic this week was the $6,000 bonus deduction for those filers who were 65 and older. I've gotten this question many times. Of course, I like to talk about Social Security. Everybody knows that about me. And so I have gotten this question, this observation several times. Hey, they eliminated taxation on Social Security. No, they didn't. They absolutely did not. What they did was they introduced a bonus deduction of $6,000 for filers 65 and older. And so that's for each individual filer, married couple, 6,000 equals a $12,000 additional deduction. So you got your standard deduction, which went up to $15,750 per individual, $31,250 or $31,500 for couples. And then 65 or older, you get an additional $6,000 deduction. So effectively, for many people, that will help to reduce and or eliminate the taxation that they had been experiencing on their Social Security benefits. But they did not come out and openly say, we're just eliminating that. They added this additional deduction. Of course, we are always very clear that we don't give tax or legal advice. So you'll want to talk with a qualified tax preparer in this regard. But we covered that on Thursday. That is our Thursday series. For the next 5 or 6 Thursdays, you'll see OB3. That's my terminology for the One Big Beautiful Bill. We kind of parse out different parts of each of that. Then on Saturday, we have coming out, this is a good one. What happens to employer-sponsored retirement accounts when you change jobs? That's a big one. We get a huge question, a huge number of questions on, hey, I'm moving jobs. What do I do with my old retirement plan? Things along those lines. So we cover that on Saturday. Mike, you want to talk a little bit about the upcoming week? Obviously, Monday, we'll have the week ahead in the markets.
Yeah, so I'll be keeping an eye on markets, of course, to see if this turns into a pullback. As I mentioned, we're at all-time highs technically right now, but the RSI momentum indicator is not keeping up. I flagged that a couple weeks ago, but then what actually happened was RSI and momentum caught up to the new price high. So maybe we get that again, but right now we're seeing some negative divergence. So that could lead to a potential pullback. And then economic data is a little weak. We have some housing data coming out. The FOMC minutes from the prior meeting comes out on Wednesday, and then jobless claims on Thursday. So not too much going on. I guess the highlight of the week would be the FOMC minutes. Jobless claims have been pretty good, which is a reassuring thing for the labor market. After that last week print we got, where the 3-month average is about 35,000. Yeah, true. Hiring slowing, but we're not really seeing layoffs increase. So that's a good thing. And that's pretty much it for the week. We'll have our annual client appreciation baseball game on Friday. This will be my first time in attendance, so I'm pretty excited about that.
Yeah, so you know what? I'll cover everything a little bit, kind of day by day. So Monday we have the week ahead. Tuesday, David's got a great post on a recent trip that he and Patty, David, another partner of the firm based out of Florida, he and Patty were in northern Georgia. So that'll be on Tuesday. On Wednesday, I put out a post about ESOPs, employee stock ownership plans. That's a topic that I've been working on in some financial planning with some clients recently. So if this post is specific to private companies, so it's employee stock ownership plans of private companies, so the stock is only for the employees. These are things that Mike can buy for our portfolios that are out on the stock market, but it's private companies, and the stock is only held by employees. How that works, why companies established them, and then what to do with them if you're fortunate enough to be with a company that has a ESOP plan. The OB3 topic next week will be for the family tax credits. And there's also a new family account that has been created by OB3 for children born in 2025 and into the future. That's new. That's brand new. Just learning about that myself, but there is a new type of account where the government is going to contribute $1,000 for newborns. So that's
a great idea.
Well, it's a fascinating. with many things with the government, it's a fantastic idea in theory. So I got to look into it a little bit more. Where's the catch here, right? Maybe there's not. But we have some of the kind of factual information about how that works. And then, yes, on Thursday, August 22nd, this will be our 5th annual family night at the Washington Wild Things Frontier League baseball game. It has been a tremendous event. I get excited about it every year. We get to see a ton of folks. It is a relaxed evening. There are no presentations. There are no discussions of markets or inflation rates or OB3s or anything along those lines.
I can't promise that, Brian.
Well, I know. Certainly there are a lot of side conversations, but what I'm saying is we're not going to stand up with, PowerPoints or anything along those lines. We're going to hang out at the baseball game. The Washington Wild Things do an amazing job. It is a beautiful field. They are great folks. It is really, really good baseball that, you darn near feel like you're right on the field. So it's a great experience. It's wonderful to see so many of the folks that we work with. We do that every year, kind of late August. We had traditionally done that on Thursdays, but we got a lot of feedback. That's kind of the first week of school. We try to pick the last Thursday home game for the Washington Wild Things. But a lot of folks said, geez, I really can't come. It's the first week of school. Can't keep the kids out late. So we're doing it on Friday night. So let everybody let loose a little bit. So that's kind of the week ahead. And Mike, as a former baseball player, I'm sure you'll have a lot of insights for us into some of the nuances of the game. I'm looking forward to that.
Yeah.
All right, so that's kind of what we got. Mike, any other observations, anything else you'd like to add? Of course, down at the bottom there, that's our website on www.hpkprovident.com. You can contact us via email. Our phone number is right there. That is a location where you can actually securely upload documents. We have folks that do that. Say, hey, could you take a look at this for me? Give me some thoughts and observations as to how that fits into my financial plan. And that's where all of our blogs and informational content is contained as well. Mike, anything else?
No, that's it for me. You want to do the honors of the fascinating disclosures?
Yes, I do want to do the honors. These are very important things. We want to let you know that securities are offered through LPL Financial LLC, a member of FINRA and Civic. Advisory service offered through LPL Financial LLC, a registered investment advisor. Brian Peluso, Mike Kutch, and David Harper, registered representatives of LPL Financial LLC. Content discussed is for informational purposes only, not intended as an offer or solicitation to buy or sell any security or investment strategy. Any opinions expressed are those of us and not necessarily reflect the views of LPL Financial or its affiliates. All investments involve risk, including the possible loss of principal. Communications may include links or references to third-party websites. HPK, www.hpkprovident.com is a third-party website. We manage it, but it's third-party from LPL. These links are provided as a convenience only. LPL Financial and its representatives are not responsible for the accuracy or content of such sites, although we try to make ours as accurate as possible. Brian and Mike and David, when it's here, HPK Provident Advisors may only transact business in states where they are properly registered or exempt from registration. Please contact directly for information regarding licensing and registration status. Past performance is not indicative of future results. You should this really is the most important. You should always consult with a qualified financial professional, tax professional, and legal professional for those parts of your specific situation before making any financial decisions. That's it, Mike. That is the whole deal. All right, everybody have a great weekend. We will be back on Friday morning. Friday afternoon, 12:30 p.m. Eastern Standard Time. That will be August 22nd. Any thoughts, questions, hopes, feelings, or concerns, please reach out to us and have a wonderful and safe